I'm glad to be here, and I don't know if it was introduced, but I run the ETF team for Bloomberg Intelligence, and we've been covering the crypto ETFs like crazy, and it's gotten me sort of more into this world. So I'm here to learn a lot, to be honest, as someone from the US and also an ETF person at heart. So I want to introduce our panelists. We'll let them introduce themselves. We'll just go down, quick intro, start at the end with Niccolò.
Hey, I'm Niccolò. I'm head of digital assets trading and investments at Intesa Sanpaolo. I'm actually curious how many of you know Intesa Sanpaolo. Just raise your hand. Okay, I mean, there are a few. Eric, you don't know Intesa?
No. Soccer player?
Actually, no. So usually when I go at crypto conferences, people think that Intesa Sanpaolo is like a Brazilian startup, but no, actually we are an Italian bank. We are one of the largest banks in Europe, and yeah, I run digital assets trading there. It's a new business for the bank. We started last year, and it's focused on trading crypto-related products. It's a prop trading desk. We don't trade for clients, but yeah, that's what we do.
Hey guys, Caio here, founder of and CEO of Lumx. So we are one of the leading Web3 startups in Brazil. We offer a complete platform for companies to properly build blockchain power applications, abstracting the complexity of development. So we offer a sort of tools that range from embedded wallets, smart contracts, deployment and management, and asset tokenization, and also transaction broadcasting. We have been working with some of the larger enterprises in the region from across different industries, like not only fintechs, but also like ticketing industries, retail companies as well. So it's really diverse. And yeah, pretty happy to be here with you guys.
Hello, everyone. My name is Jorge Antolínez, or George, if it's easier. I'm the CBO at ioBuilders. We are a Spanish technology company specialized in building solutions for the financial industry and basically specialize in tokenization of real-world assets, how it's called now, but basically digital securities, digital credit, and digital cash. And we have a pretty big team, over 90 people at the moment, and mainly focus on the financial industry and regulated space.
All right, thank you. So as mentioned, I run a team of ETF analysts all over the world. Are we going to have to hire a token analyst soon, Niccolò, or am I going to have to make up new titles for everybody? In 10 years, are we going to all be analyzing tokens instead of ETFs?
Yeah, I mean, I think that's definitely something you should consider. Even though, don't you feel like tokenization is a bit like the opposite of an ETF? Because like an ETF is basically a way to bring some crypto assets like Bitcoin inside a traditional finance wrapper, and tokenization is basically the opposite, like bring a traditional financial product into a tokenized wrapper. So actually ETFs are getting so successful, so maybe TradFi wrappers are actually better than doing the opposite and tokenizing stuff. I don't know.
This is kind of what I want you guys to prove to me, because with an ETF, look, I mean, now they charge almost nothing. The liquidity is really good, like 1 basis point to trade them. Compare that to most crypto exchanges, that's a really good deal. They're regulated. You can call somebody if something goes wrong. You can arbitrage it. What's the problem here?
Yeah, I mean, I actually think that tokenization has really it was really slow to take off because in the end that finance already works today. We have these ETFs, everything works very well in traditional finance. So why do you change everything with tokenization when everything works so well, right? I mean, it's a good question, and I think this is why tokenization basically didn't take off for the last 6 years. You really need to change everything if you want to tokenize stuff. You need to change custody. Custody is different. You need to understand wallets and private keys and how to store them safely, and that's not easy. Trading changes. You really need to understand where to trade these security tokens, because right now there are no liquid markets for security tokens. Like a traditional bond or a traditional ETF, I can trade it anywhere in the world, but like a security token, a tokenized bond, where do I trade it? There is no liquidity. So all the operational side is different. So like you really need to change everything, and change is costly. So this is why banks have been waiting for the last 6 years, sitting on the sidelines and like asking themselves the question, which blockchain should I use? Should I use a private blockchain? Should I use a public blockchain? Which custody solution should I use? And which regulation do I apply to tokenized securities? So yeah, these are not easy questions to answer, but I feel like this is all changing now. Regulation is getting better, technology is getting better. So I feel like over the next 3 years, we're going to see a lot more tokenization. And I hope that it's not just going to be ETFs and like wrapping crypto assets into ETF, but I think it's going to be the reversal, actually seeing traditional finance assets into like made into tokens.
All right, and Jorge, let me bring you into this. What are we tokenizing here? So obviously we can get the S&P 500 or a European stock index pretty easily. Are we talking about things you can't get currently, like farmland in Nebraska or art? Is that the kind of stuff? Because I definitely could see a value in that instantly.
Yeah. So before I get to that, I would like to add a little to what Niccolò was saying before. So I absolutely agree with you. And yes, capital markets at the moment work really well. And there is obviously, and is going to be for a while, a lack of liquidity, right? But I think it's just a matter of understanding that the technology works really well and works better than what we currently have. And if we're able to bring good asset managers and quality assets to the new rails, I think that the demand is going to come, right? On the offer part is quite obvious. Why? Because I think that everyone that works here understand that at the end it's a technology that, and we've been in this space since 2017, works better than what we actually have. Why? Because if you bring it down to the basics, it's just a very good ledger, right? Where you can, that is very secure and is cryptographically secure, where you can pretty much represent value and move it very efficiently, and you can move it instantly, pretty much in an atomic way, right? If you represent it in the same ledger, the assets, and you represent the money, you can actually move it super efficiently, which is something that doesn't happen now. We all know what happens with settlements, human errors, etc. The idea of having this very good ledger, I think it's a unique opportunity. It's something that we still don't have in capital markets. They work really well, but I mean, at some point, when you buy a stock or you buy whatever, they tell you have it, but you know that the clearing time, the settlement times are going to take a little bit, right? With this new technology, you can do it instantly, right? And I think that brings a lot of value, especially when you have, as I said, the asset and the money in the same ledger. And then you were saying, what are we going to tokenize, right? And now everyone is talking about these real-world assets. Well, I think that, yes, at some point you should be able to get other things like art or land, buildings, but the truth is that at the moment I think it's very, very difficult because of regulation, right? We, for example, have a project called OpenBrick. It's basically a trading and settlement system to trade a real estate project, basically to finance real estate promoters or real estate asset owners. We cannot tokenize the asset itself, the real estate assets. Why? Because there is a regulation, and in Europe you need to go to the notary and to the registry, and you need to do that off-chain, right? So you cannot tokenize it and sell it, because when you sell it, you're not going to be selling the asset. I think that's going to come at a certain point, but you will need to update regulation, registries, etc. But I think it will end up happening, because if you can represent value and move it more efficiently, it will come at some point.
Caio, I know emerging markets are your specialty. Is this the similar situation there with regulations and logistics being a huge hurdle?
Yeah, actually, when you look at the Brazilian market, especially, the space is booming right now, mostly because, I don't know if you guys know that, but Brazil is one of the leading players in the world when it comes to the CBDC development. So we do have a CBDC going on, which is called Drex, which is the name of the project. And it's actually a wholesale CBDC. And now we have around 80 companies participating in the pilot, which is split into 16 groups of companies. So there's some groups with five companies, other with a different number. But basically, the whole movement in Brazil is not that focused on like leverage blockchain for payments, because in Brazil we already have Pix, which is our instant payment system, and basically it means that we already solved the payments problem. So if you go to any place in Brazil right now, like we go to the beach and we want to buy like a water in the beach, the salesperson will accept Pix. So Pix is really adopting the space. So Brazil is not that focused on leveraging blockchain for payments. It's actually to focus on asset tokenization, like to bring liquidity and to bring more efficiency to the whole capital markets. And of course, it gets spread out to other markets as well. So there's companies in other industries that are also like going to blockchain, because in the future, when the CBDC is live, they will be already prepared to be integrated into this infrastructure. So there are like ticketing companies, tokenized tickets. There are fintechs like launching loyalty programs to tokens like Nubank. So Nubank just surpassed 100 million customers, like I guess last month, something like that. And they have Nucoin, which is their loyalty token. So it works similar to Miles. So a lot of companies like going forward to like being blockchain ready, so for where the CBDC comes. But in Brazil, it's mostly focused on tokenization. When you compare it to other places in Latam, like Argentina and Mexico, is really different. Like when you look at Argentina, especially in how the economy is nowadays, you see people using like stable coins in the daily basis. So we actually have a team member living in Argentina, in Buenos Aires, and she said that it's crazy. Like you go to a supermarket to buy like bread, and people are paying with USDT, which is crazy. But when compared to Mexico, is actually different. People also use stablecoins to pay for stuff, but the main use case there is for remittances. So Mexican people from the US sending money to their families in Mexico using stablecoins to do that. So emerging markets seem like the same thing, but when you compare it to different countries and different realities, you see that it's really different. In Brazil, we don't have this necessity of leveraging stablecoins for payments. But when you look at the potential of bringing liquidity, bringing efficiency to the whole space, is where Brazil sees value.
And how does the government view all that? Because I know, obviously, one case for Bitcoin and crypto in general, especially Bitcoin, is that it's government proof. I mean, it's a way to not let the government steal from you in terms of money printing and inflation and that. So do they group that in with that whole concept of like, this is something that's going to upset the government?
This is a great question. And actually, this is something that even us as Brazilians are like surprised, because the whole pitch deck, let's say, of the CBDC is, okay, we of course will start more with a full regulated platform that works kind of the same as it works now, but with blockchain. But the roadmap that they have is, okay, I want to be to make people be able to access DeFi to the CBDC. So actually, what the central bank in Brazil is actually doing is that they want to have exposure to the, let's say, crypto native world. How is still a question, but they are not trying to be this like black box, and you just have like the Brazilian CBDC and everything else. And this is something really good, because literally last week, Circle had a launch event in Sanpaolo. And when they announced their, the official entry in the Brazilian market, and they made partnership with two institutions: Nubank for the retail side, and BTG, who actually is our investor, from the institutional side. So now they have local players. We have helped them spread out the dollar accounts in the space. And actually, the central bank is really like pushing this movement and incentivizing the space. So it's really surprising.
All right, Niccolò, let's go to this idea of the customer experience here, because pretend I'm an RIA, right? I'm an advisor, and I have a portfolio of mutual funds and ETFs, and I know how to buy them. I go to a brokerage, I type in the ticker, I hit buy, and I own it. Now, in the back office, a bunch of stuff has to happen. Now it's T+1 in the US, but that triggers all this stuff, but I don't know what's going on as a customer. All I know is I just bought SPY, and I own it instantly, and I go about my business, and that's a pretty quick, frictionless transaction, which is one of the reasons ETFs have taken off. They're just so convenient. And then as the years go on, I only pay a few basis points for all that work, dealing with the dividends and the rebalances and the corporate actions. There's a lot of work in providing all that S&P 500 exposure. How do you sell tokenization of that to me if I'm that advisor? Like, help me understand the pitch here.
Yeah, so thing is, like, given all that you said, like just a simple transaction, buy an ETF, one click from my phone, I buy it. Like, it looks like finance is already digital. But in reality, finance is very manual for everything that happens behind the curtain when you hit that buy button. Everything needs to go through with a lot of different intermediaries, and basically all of trading in the world runs on the sophisticated versions of Excel spreadsheets where some intermediaries keep tab of who owns what. But yeah, so finance is very manual, and tokenization is changing all of this because with tokenization, the blockchain takes care of everything that has been done by these intermediaries. And like sometimes the database don't match between counterparties, and you have trade breaks. I'm a trader. I know like sometimes there is a trade break. Commissions are different. Price is slightly different. So you need to adjust all that. And all the back office, middle office work to get that through. I mean, the blockchain takes care of everything, and it's changing how we transact assets. And all of this change is starting from stablecoins. They are the simplest asset out there, and people love stablecoins. They just crossed 160 billion in market cap recently. People love them in emerging markets for everything you said, Caio, giving accessibility to financial services. But like tokenizing money is just the first step. The next step is actually tokenizing assets. So money market funds are the next thing to be tokenized because they're just slightly more complicated than stablecoins. You just need to add some yield on top. It's actually not that hard to do it, and BlackRock just recently did it, as was mentioned before, and they gather 400 million in inflows on their tokenized money market fund on the Ethereum blockchain.
And
so yeah.
let me break up there, because BlackRock doing it, right? So if we look at the next 10 years, let's say tokenization takes off, we assume BlackRock's going to also be the biggest firm in that too, since they're the biggest, and they're one of the biggest in mutual funds. Now they're the biggest in ETFs, and now they're getting into tokenization. And then if they are, did we really decentralize anything?
I think the point of tokenization is not necessarily to decentralize everything. It's just to bring efficiency to financial markets. And I think that BlackRock is one of the largest financial firms in the world, and they are going to keep being one of the largest financial firms probably in a tokenized world. But what I think is that over the next few years, we're going to see progressively all the assets being tokenized. After money markets fund, we're going to see bonds, because you just need to add expiries, and it's actually not that hard to do it in a smart contract. And then equities, and then real estate, and and eventually, I think maybe in 15 to 20 years, every single asset in the world will be tokenized, and we'll no longer have traditional financial assets, and everything will be a token.
Jeez. That's crazy. That would be like, so it's 2024 right now. 2014 wasn't that long ago. So you think in 10 years, everything...
15 to 20.
Okay, 15 to 20. Let's talk about liquidity a little bit, because one of the reasons ETFs work so well is you can arbitrage them, right? So if the price of SPY goes above the value of the 500 stocks in it, a market maker or an AP can just arb that and make a risk-free profit. So it really... ETFs utilize all of the market makers and the power of arbitrage to keep the price near the NAV. How will that work with tokens that you can, maybe I'm being base here, but how will the price of the token be connected to the underlying value if, let's say, there's a rush to bid up the token in, say, in the kind of a secondary market? Who's going to arb that, and how will that work?
That's a difficult question. I think it would work the same way as it does right now. At the end, you're basically changing the technology in the rails, but the system is the same, right? In our company, for example, one of the most important projects we have at the moment is we're building a secondary market for the private equity market. And this secondary market is probably going to start with competitive auction kind of phase, and it works the same way as traditional systems, right? At the end, you just match the orders in a certain way, and you find an equilibrium price, and then you do the settlement. I don't think that technology itself has to change the underlying how it works. It just makes it more efficient.
Let's talk a little bit about. We'll go to Caio on this. Looking forward, like what are some major projects or goals that you specifically and your firm are looking to accomplish in the next, say, 3 years?
Next question. So yeah, due to the regulations, the regulation in Brazil already say like the space is really friendly for crypto firms. The CBDC is moving, but we're still far from like to have a full, let's say, production-ready space for okay, let's tokenize everything and do everything on the blockchain. So there's kind of gaps when you compare the different industries, right? So when you go to the financial industry, mostly driven by the CBDC, banks and financial institutions are more aware of what is blockchain, the benefits, and blah, blah, blah. But when we go to other industries, the level of awareness is really low. So we still have to educate the market to explain what is blockchain, what is the benefits, and everything else. So it's really different depending who we're talking to. And this is funny because when you look at the portfolio of Lumx, most of the players that we work with are non-financial companies. So let me give you an example. So one of the main clients that we have right now is a company called Simpla, which is the largest ticketing company in Latin America. So they have like 15 million active users, and they sell 40 million tickets per year. And basically what they did is that they integrated all of the infrastructure and tokenized everything. So now every Simpla user has a wallet, an embedded wallet actually in their platform, and every ticket is in NFT behind the scenes. And this is one of the main use cases that we have been seeing in the region. Okay, how can we bring value and raise the efficiency in different industries? So have been working with fintech companies looking for digital identity solutions. We also have great conversations and some projects going on with companies from the agribusiness industry as well. So looking for carbon credits or tokenize some instruments in their specific necessities. So basically, like, just to answer your question, what we are looking for right now is to bring value to industries that are like more ready to be disrupted and not that related to regulation, to have a regulation-heavy environment, like the financial system where I can just tokenize the real estate now and sell it for business or reais. So this is kind of the things that we have been working in the space, and yeah, pretty excited.
All right, and since we're running on time, I'm just going to give each of you guys that question too. Just what is most exciting to you right now for the next couple of years? Niccolò.
Yeah, so to me, actually, how we can bring smart contracts into traditional finance, because it's something that's it's not really been done at scale for now. And if you look at decentralized finance, DeFi now, there are a lot of cool things going on with smart contracts. We have decentralized exchanges like Uniswap transacting basically $1 trillion of value every year. And this is something that people in TradFi usually don't even know it exists. But it's completely automated by smart contracts. Basically, 0 employees are running this. It's just pure computer code that cannot be modified and works perfectly well in settling instantly every transaction with no counterparty risk. This is pretty cool.
Can I jump in here?
Yeah.
Okay. But who do you call when something goes wrong? That's my one question about DeFi in general. Even though I hate call my cable company or the phone company, it takes forever, at least there is a number I can call and someone eventually will pick up and I can usually work it out. How do you deal if there's a problem?
I mean, so usually if a smart contract is built correctly, there cannot be a problem, because it's just computer code. It literally does what it is programmed to do. So what is the issue? It's that it doesn't always, it's not always programmed in the right way. So sometimes there are bugs, and sometimes people exploit them. And it was mentioned before how much money was lost last year, more than 3 billion, I think, in smart contracts, hacks, and exploits. So we have smart contracts that are not very safe, and we have much safer smart contracts that have been running for many, many years without ever having a single issue. So yeah, there are different types of smart contracts, but if they're programmed right, you don't need to call anyone because nothing can go wrong. Now, of course, there are a lot of challenges. These are not regulated. Like DeFi is not regulated right now. It's pretty hard for a regulated bank to engage with Uniswap in the present form. But why don't we take that technology and we bring it to tokenized securities? Why don't we build on top of Uniswap and use that technology that is very battle tested to provide liquidity for security tokens in traditional finance? There are plenty of examples there, but I think this is the most exciting area that is going to happen in the next few years.
And Jorge?
Yeah, so from us, I think the two most exciting things at the moment is, as I said, we are building this trading and settlement system. The idea is to have a license to operate in the European Union in the next months, and we're going to bring one of the largest exchanges here in Europe, which is going to be the market operator of this market infrastructure. So hopefully that's going to be a project really important for us, and we hope to have the first issuance in the coming months. And then the rest of the projects we're working on is basically, and that answers a little bit your question, right? Which areas and industries are going to be more impacted? I think from our side, we're focused on private and alternative markets because we think they are less liquid and have more problems, and we see volumes going up a lot at the moment. So we are working on the banking side. We're currently working in a syndicated lending tokenization platform, which is we're working with 3 top-tier European banks, and I think it's going to really impact the industry. And then really focus on the other side, on this private equity and enabling a secondary market, which is something that really is lacking in the industry and could really help as well. So that's how where we're focusing on for the coming months.
This must be what a mutual fund analyst felt like at an ETF event 20 years ago. That's what I'm thinking. So I'm glad I'm getting involved. Thank you so much to my panelists here. Let's give them a round of applause.